Assalamualaikum and hello everyone. We are from Group 9. We'll be presenting on non-performing loan and PL in Bank Negara Malaysia. My name is Muhammad Fateh and these are the group members, Tang, Tariq and also Tauhidul. And this is the table of contents for our presentation. I will give the presentation to Tauhidul for his presentation.
Non-performing loan can create an imbalance between supply and demand, which might lead to the country's economic issues. Therefore, there is a slight possibility that it can cause bigger problems in time of economic crisis. A non-performing loan is a debt that is not being repaid according to the original loan agreement. This means that the borrower needs to make their scheduled loan payments or they have stopped making payments altogether. Non-paying loans are a problem for the lender because they are not generating income, and the lender may have to write off the loan as a loss. For borrowers, non-performing loans can be a problem because they can damage their credit scores and make it difficult for them to borrow money in the future. At the same time, the lender must meet the NPL's cost, including the wind down expenses. Stock price will decrease as the proportion of non-performing loans rises. Until the NPL case is resolved, capital requirements limit new credit creation. High NPL ratio with banks' balance sheet and drag banks' profitability, because future profitability will suffer if the lender does not generate money from its lending operation. The more NPLs a bank has on its book, the less appealing it is to the potential investors. Credit availability is reduced, credit is allocated insufficiently, market trust is weakened, and economic development is slowed. In Malaysia, banking regulations stipulate that banks can only sell NPLs to companies that are majority owned by domestic shareholders. Hence, foreign equity is capped at 49%. Also, each transaction requires the approval of Bank Negara Malaysia. Non-bank buyers of impaired financing will be required to meet certain eligibility criteria. For example, a proven track record of fair debt recovery practices. Reasons: number one, selling impaired financing or NPLs is one of the ways for banks to resolve that debt quickly so that they can focus on growing their business. However, the practice is not as common among Malaysian banks as those in the regions. Number two, Malaysians move to open up the market to foreigners with potentially larger checkbooks than local players. It is a possible one. That is one of the things we were hoping Bank Negara would do. It allows for a wider market, a bigger checkbook possibility for larger sales. The impacts of non-performing loans. When a bank is unable to recover non-performing loans, it can repossess assets placed as collateral or sale of the loans to collection agencies. When a bank has too many non-performing loans in its balance sheet, it poses cash flow problems for the bank since it is no longer earning income from its credit business. Secondly, high levels of NPLs as a legacy of the crisis negatively impact credit supply and demand, reducing lending to the real economy at a time when support to the economy is needed the most. Trends of non-performing loans. Firstly, with the regulatory relief in place last year, sales were rather calm in Malaysia, and banks have had a stable NPL ratio of below 2% even during COVID-19. However, with the end of moratoriums and with the evidence of easing in underwriting standards, we expect the activity to pick up. Secondly, during these past few months, we have experienced strong activities on NPL sales in Thailand, Indonesia, Vietnam, as well as India. We view that more markets in Southeast Asia will be active again in 2022 as banks start to lift COVID-19 relief and moratoriums. Challenges we faced before. Between 2005 and mid-2012, NPL sold by banks amounted to be less than 3 billion ringgit, according to the past data by Bank Negara. Analysts say one of the reasons NPL sales as a bad debt resolution channel has not been popular in Malaysia in the past decade is because the banking sector's asset quality has been on a consistent recovery since 1997/1998 Asian financial crisis. Hence, the overall size of the Malaysian NPL market at a yearly average of 25 billion to 30 billion ringgit over the past 10 years prior to COVID-19 is not large. Most of the banks tend to deal with NPLs all by themselves.
Okay. Next is issue non-performing loans related to commercial bank. Okay. So the first issue is all eyes on non-performing loans. That is Leong Yam Meng said that with buy now pay later rising in popularity, it is likely that this segment will start conducting the sale of NPLs in time to come. Okay. On the sale of NPLs by banks, Leong said that we have seen several Malaysian banks prior to the COVID-19 pandemic, such as CIMB Group Holdings Berhad, the country's second largest banking group, selling a small portion of its NPLs in 2020. Other than that, in 2019, AMMB Holding Berhad sold NPLs from its two subsidiaries, that is Bank Berhad and Bank Islamic Berhad, to Icon Capital Group Sdn at a value of 553.91 million ringgit Malaysia. Okay, this is how Bank Negara Malaysia handles NPLs. Okay. With the release of the Financial Sector Blueprint 2022 until 2026, the central bank is seeking to remove the existing foreign equity limit requirement for buyers to attract more established international players to enter the market. Okay, for the next issue is Maybank has no plan to sell its non-performing loans. Malayan Banking Berhad is not looking to sell a portion of its non-performing loans, according to its acting group chief financial officer, that is Khalijah Ismail. Speaking in a virtual media briefing, Khalijah highlighted that the group gross NPL level currently stood at 1.92% as of June 2021, down to 2.03% reported in the same period last year. Okay, this is our Maybank managed NPL. Okay. For Maybank, the best way they can manage the NPLs is usually they will exhaust in terms of their efforts internally. So how much they can improve by trying to work out with their customers and trying to recover the loans as much as possible.
I will continue on the effects of COVID-19 to NPL. Based on the data, during COVID-19, NPL aggregate ratios have generally remained stable considering the relief programs, which is moratoriums. What is moratoriums? During the moratoriums, interest and principal payments are on pause, and these loans are not classified as NPL, which leads to a shadow asset category and increases risk. Based on the data released by Bank Negara Malaysia, NPL in fact rose dramatically from Ringgit Malaysia in September 2020 to the December of 2020. NPL's ratio of Malaysia. So if we see here the graph of NPL ratio in Malaysia from the 1st November 2021 until 1st October of 2022, the lowest NPL ratio, which is during the end of 2020, and the highest is during the 2021, the mid-year of 2021. So what is the high and low ratio of NPL? A high ratio means that the bank is at a greater risk of loss if it does not recover the owed loan amounts. Meanwhile, a small ratio means that the outstanding loans present at low risk to the bank. What happens if NPL is not sold by the bank? International Finance Corporation is in the view that high levels of NPL may become a major problem in emerging economies, stalling credit flow, and also impending growth of credit flow. What happens if NPL resolve? As I talked before about what happens if NPL is not being sold. This one is NPL resolve. Resolving NPL will help to maintain efficiency in intermediation for the financial sector. Economic recovery may pick up the pace, helping financial institutions in Malaysia to unlock their capital and also encourage new lending to local businesses and households. As we see here, the economic recovery may pick up the pace. So the economic impact for countries that reduce NPL ratio is they will experience faster GDP growth, they will enjoy better labor market outcomes, which are higher rates of labor participation and lower rates of unemployment. And the credit growth was also faster in this group of countries. These are the effects of NPL removal to the agreement of lender and debtor. We may think that the agreement will be broke. However, based on the guidelines on the disposal which are issued under the Banking and Financial Institution Act 1989, sale of NPL does not affect any debt restructuring agreements. The borrowers or the debtors with non-performing loans may be able to negotiate with creditors or the lender to forgive part of their debt. However, this may damage their credit rating, making it harder and more expensive to borrow in the future. A borrower or a debtor may start making repayment to a loan that has already been classified as non-performing loan, NPL, and after the repayment, the loan will be known as reperforming loan. That's all for my part. Thank you.
Besides Malaysia, I will proceed with the non-performing loan in Europe countries. Many banks across Europe suffer from high ratio of non-performing loans. If compared to Malaysia, the NPL management done by BNM is considered quite good, because if you go and search the ranking of NPL across the countries around the world, you will find the ratio of NPL in Malaysia is quite low. The NPL level will not exceed 2%. But in the case of Europe countries, high NPL is common. NPL increased sharply on average across the European Union following the financial crisis, rising from 2% of total loans in 2006 to a peak of 7% and to a peak of 8% in Euro area. Even they have declined slowly since then, but the ratio of NPL after that is still considered quite high. Next, this is the graph showing the percentage of NPL by sector in June 2016. From the graph, we can analyze that in all high NPL countries, especially the Europe countries, there is a high rate of NPLs in loans to non-financial corporates and the lowest to the government, but there is a much more varied distribution of NPL in lending to household and to the financial sector. Let's take a look at the factors contributing to NPL in Europe. Actually, there are a lot of other factors. Some of them have been discussed in class before, so I'll only focus on these 4 factors. First, banks' lack of preparedness. Some banks are unprepared to manage NPL effectively. They may not have stratified data on NPL exposure. They may not optimize strategy to reduce them through workout sale, or the lack of manager with sufficient NPL expertise. Second, structural impediments. In some Europe countries, some types of creditor they are overly protected from foreclosure actions. There are also insufficient number and skills in the judiciary to process action against non-performing borrowers, and there are also legal limitation on holders of some asset classes and on the sale of some types of collateral, for example, the residential property. Third, investor pricing. Banks may be reluctant to sell NPLs because of high bid per ask spreads in the market, reflecting information uncertainty about the value of NPL, the time and cost to recover the value in the NPL or to realize the value of collateral. And the last, limitation on government assistance. There are financial and legal constraints on government assistance. For example, the European Union State Aid rules. This will limit government's ability to create the NPL asset management companies, the AMC, to provide guarantees or directly recapitalize the banks. And what is the solution to reduce NPL in Europe countries? I'll focus on these 3 main solutions. First, the ECB, which is the European Central Bank, and the national regulators should tighten bank supervision. Banks should be required to set aside more capitals for NPL that remain too long to meet the loan structuring target within a reasonable period of time. Second, active market in distressed assets need to be developed. In some cases, an asset management company can start such a market. For example, banks SERIP's entry into the market makes Spanish banks to anticipate upcoming asset sales and adjust their asset valuation and start to selling the NPL. This in turn will attract more investors. Third, structural reforms are needed to make bankruptcy more efficient and make it easier to collect debts. For example, the average length of foreclosure proceeding in Italy is almost 5 years, compared to less than 1 year in Germany and Spain. Lengthy court procedures should be shortened. Such reforms will increase the value of collateral provided by borrowers, and therefore make it easier for banks to write off the bad loans. That's all from us. Thank you.